So another thing I want to talk about here in this price action, this special edition price action week in review, is about trading on Friday. Trading on Friday. And here's the reason why by 11 a.m., I'm usually out of everything, whether I'm in profit or not. Well, Derek, why? Because let's take a look at oil here. This is oil on the 4-hour, and I can see obviously not only is price trapped in between structure here, it's also trapped in the overall trading zone. I have an equal part, maybe a little more supply, but I have an equal part of demand and supply. Prices and consolidation. And if you find yourself in this and you're looking up in this 11:30, then it's probably time for you to start contemplating, hey, do I go ahead and just take my profit, or I eat whatever negative profit I am and come back and fight another day? Well, Derek, why would I do that? I mean, I'm in profit. Why can't I at least put a trailer stop in? And I guess you could, but let's say in this case, price never moves. So you're in profit and then the market closes and you're stuck in it through the weekend. Now, this broker may be closed, but there are over-the-counter trading, weekend trading that is happening. And what if what if you're in an upward movement in this case? But what if something happens, a news event that happens, and it affects oil, and then it gaps down? Ladies and gentlemen, you can't get out of the trade fast enough once the market opens on Sunday. You cannot get out of it fast enough. I have seen, quote unquote, experienced traders have $5,000, $6,000, $7,000 accounts, get in US 30 on a Friday, and don't get out, and then have the thing gap so bad the other way that it just kills their account. So you go from being in profit, $7,000 account, and then you go down, and then, you know, the broker kicks you out with $15. It's horrible. Now, does that happen to a lot of people? Well, it happens enough. Now, when I first started trading, it happened to me the other way. It happened to me in a positive way. I got stuck in a trade on Friday, and we used to, the genesis, I guess, of all of this, we used to meet at this donut place in Houston. Kim, when she came to Houston, her and RJ and I had met there for a meeting. Kim, I don't know if you remember that little donut spot, but we used to meet there. And on a Sunday, I opened up and it gapped in my favor. And I was up like $2,100. I ended up closing the trade out at $19.40. It was my first big conquest, so to speak, in trading. I was stuck then. It was over. With no way I wouldn't go make this work. But that was more luck than anything. Because at that point, I think I've been in trading at that point, maybe, I don't know, a month or so. So I didn't know anything. I could barely get into a trade, but it just worked out in my favor. So and this leads into another subject that we discussed about entries. Here, again, this is oil, but let's just look at it from a price action standpoint here. Looking at this on its face value, do we have a trade here? No, we don't. We don't have a trade here. Do I have volume? I have a little bit. Not a lot, but a little bit. But I don't have any space. And you could look here at structure, and the only way that I'm going to break through here or here on a downward movement is to have volume. Volume kicks down doors. You should write that on a sticky somewhere. Volume kicks down doors. That's a life lesson too, Kim. Because volume equals money. Money kicks down doors. That's pretty deep there. Money kicks down doors.